Do you have a goal to live off dividends? Perhaps you've seen the topic on other videos or have read other blog posts talking about how you're going to need millions of dollars to get there. But how is that possible today? Well, stick around because by the end of the video, I'm going to give you a blueprint on how you can generate $50,000, $100,000, or even $500,000 of dividends each and every year. Now look, it's not something that's going to happen overnight, but depending on the goal, this plan will help get you there as soon as possible. And since you're looking for information on dividends, I wanted to introduce Dividend. Dividend, it helps investors like you and I find high-quality income securities for their retirement and financial freedom portfolios. And the Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. And because they do such a great job, I use them myself to research companies for the videos that I create here. So if you'd like to support the channel, take a look for the Dividend link in the description below and stay tuned because I'm going to be giving you a promo code worth $41. It's a discount off their newsletter. All right, so without further ado, let's get started. According to a recent Census.gov report, in 2019, American households had a median income of $65,712. Now, of course, that was pre-pandemic, and between the Great Resignation and inflation, today, that number is certainly going to be a lot higher. Unfortunately, though, thanks to inflation, the cost of practically everything is just going up. You know, from the world opening up after the pandemic and the war in Ukraine, gas is expected to approach $5 a gallon, meaning much higher prices for practically anything that needs to be moved from one place to the other. Heck, even toothpaste now costs $10 a tube. Can you believe it? All of this just means that at the end of the month, we have less money to buy the things that we're used to buying. So, the idea of living off dividends, well, it's a pipe dream, right? I mean, with all these increases, they eat into our wallets. And I wouldn't blame you if you were ready to throw in the towel. But you don't have to. There's a way that you can live off dividends, and there's an even faster way of doing it. Living off dividends doesn't need to be a dream. Do you think I'm crazy? Do you think you need millions of dollars? Well, I wouldn't blame you if you thought that. I mean, if you look at blue chip dividend stocks like Apple, which currently cost $174 a share and pay a measly 0.51% dividend a year, it means you get just 88 cents a year for each share of Apple that you own. And if your cost of living is $50,000 a year, well, it means you need more than 56,000 shares of Apple at $174 each to live off your dividends. And by the way, that means $9.8 million. Sorry, but $9.8 million portfolio is unrealistic for most. Now, that was an extreme example. Other dividend companies aren't as bad. Well, let's take Procter & Gamble, for example. They're a dividend king, and their shares cost $152, and they pay a 2.3% dividend. Okay, so it's better than Apple, but still, you still need more than $2.1 million for you to live off dividends with this company. Does that sound unrealistic? Well, for most, it's just a dream, but look, it doesn't have to be. Here's a secret that nobody tells you about public companies. These companies want you to keep their stocks. They don't want you selling them. When you sell stocks, the price goes down. So they want shareholders to keep the stocks. And the best dividend companies do whatever they can to build value for shareholders. In other words, shareholder value. When it comes to dividend investing, there's three primary ways a company can offer shareholder value: a dividend reinvestment plan, increasing the dividends, and share buybacks. So let's start with the first one. A dividend reinvestment plan is a service that some companies offer to shareholders that allows them to reinvest their dividends into additional shares of stock automatically rather than receiving the cash. Many companies offer this service, and it's usually free to participate. I want you to stop and ask yourself this question. You may have heard it before, but it's really important. Which one would you rather have? $1 million or a penny that doubles every day for a month? Well, I wouldn't blame you if you said, I'll take the cool million. But look, a penny that doubles every single day is worth $5,368,709.12 on the 30th day. And Albert Einstein once said, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. And it's the same thing when it comes to reinvesting dividends. Investors who participate in dividend reinvestment plans enjoy two main benefits. First, they get to reinvest their dividends automatically to buy more shares of a stock without paying a commission, which would then eat into their returns. Second, they can dollar cost average their way into a position over time, and that smooths out the effects of volatility. In other words, when markets go down and stocks are cheap, the dividends yields usually go up. Think of it like a snowball that gets bigger and bigger as it rolls down a hill. When you own stocks and your dividends get reinvested, you get more money each quarter and each year as your dividends goes towards buying more dividend-paying stocks. And let me give you an example. Now, let's say you owned 100 shares of AbbVie, a gigantic drug company. And today, the company pays dividends totaling $5.64 a year, or 3.52%. Sound exciting? Well, let's say you owned those 100 shares and did nothing with them. You put them under your mattress. Well, no matter what happens to the price of the stock, as long as the company continues, at the end of the 10 years, you'd have received $5,640 in dividends in 10 years. Now, let's say, for instance, you reinvest those dividends over the same 10 years. And reinvesting the dividends means you're buying more AbbVie stock with the dividend. Well, in that case, at the end of the 10 years, you'd now end up with 141 shares and more than $6,600 in dividends. Now, okay, you might say $6,600 in 10 years is not enough to live off, and I get it. But it's only a part of the equation, and the next part is going to make things a little bit clearer. This part is exciting because after dividend reinvestment plans, the next way you get to live off dividends fast is through dividend increases. When companies increase dividends, they give you, the investor, a raise, more money, meaning an even faster path to living off the dividends. Dividend growth investors know about the dividend aristocrats and the dividend kings. These are companies that have increased their dividends for each of the last 25 years in the case of dividend aristocrats and 50 years in the case of dividend kings. It's like getting a salary increase each and every year for 25 or 50 years or more. Can you imagine? Well, with the right dividend stocks, you don't have to dream about it. It's a reality. So we agree that being enrolled in a dividend reinvestment plan is the way to go. Now, let's look at some dividend companies that have raised their dividends and how dividend increases can help get you living off them even faster. And here's another company, Enbridge. This is a Canadian oil giant, and 5 years ago, they were paying 37.9 cents a share every quarter in dividends. Today, they're paying 67.4 cents a share. And since oil companies make more money when oil prices are high, this dividend probably doesn't even take into consideration the extreme growth in oil prices we've seen lately. And here's another, Altria Group. This is the company behind the popular names like Marlboro cigarettes and Budweiser beer. 5 years ago, this company paid a dividend of 56.5 cents a share. And today, it's 90 cents. That is a 60% increase. When was the last time you got a 60% raise for doing practically nothing? The last way companies give shareholder value is through share buybacks. When a company is successful, it can use its money to buy back shares from the market and effectively burn them. This increases the share price, yet the amount of money they pay for dividends remains the same. And when companies both increase the dividends and repurchase the shares, well, you get a recipe for explosive growth. Let's go back to AbbVie for a second. AbbVie frequently buys back their stock, $5 billion at a time, and sometimes more. And not only that, they recently raised their dividend by 8.5%. As you can see here, 5 years ago, their dividend was 57 cents a quarter, or $2.28 a year. And today, it's $5.64 a year. So in this case, their dividend nearly tripled in just 5 years. Imagine all the extra shares you could buy with 3 times the amount of dividends. Now, let's have a little fun with this. So you've stayed with me this long, and I'm going to be leaving the best for last. Let's say you're looking to live on $50,000 a year on dividends. Trust me, it's not a bad goal. In the last 5 years, AbbVie's stock has gone from $65 to $161. That's a 19.85% annual compound return on investment. It was kind of a perfect storm for AbbVie, well, in a good way. And if we plug in the numbers, say into an advanced dividend calculator, we can put in the share price, today's dividend yield, expected dividend yield increases, and stock prices increases. And after 10 years, we get a balance of over $157,000 in stock and a little over $10,000 a year in annual dividend income. But what if we double the holding time to 20 years? Well, now the portfolio explodes to over $2.7 million, and you get more than $386,000 in annual dividend income. And we were only talking about replacing $50,000 a year. And other than reinvesting dividends, none of this takes into account adding to your portfolio. If you were to invest an extra $100 a month, the portfolio would now jump to $3.5 million in this example, and just shy of $500,000 a year in dividends. Add an extra $200 a month, and now you've got a portfolio worth over $4.3 million and over $600,000 in annual dividends just by investing $200 a month. Now look, past performance isn't necessarily what will happen in the future, but it's what financial advisors base investment decisions on to begin with. And with a $4.3 million portfolio generating $600K a year in dividends, well, that's just an example with AbbVie. Now, stock portfolios should be diversified across many industries, and you should definitely have more than one. So not everyone's going to have the same performance, but you get the idea why reinvesting dividends, increasing dividends, and share buybacks can create the backdrop to a perfect portfolio. Now, do you own any dividend stocks? What's been your experience so far? I love reading and responding to your comments, and I hope to see you in another video. Thanks so much for watching, and I'll see you later. Bye.